Alright guys, we must go over a price prediction for AMC stock this week. Now this week is very important for multiple different reasons. We obviously have the CPI report on Wednesday, and that is what my bullish thesis really consists of. If we see the third straight declining month of core CPI, the metric of inflation that the Fed pays attention to, which is inflation minus food and energy, the two things the Federal Reserve cannot control, that could be very bullish for the markets. At the same time, we have a lot of retail stocks that are reporting earnings this week, and AMC is on Monday in after hours. So we are going to get into all of the information that you guys need to know. Stay tuned. I hope you guys had a great day, and happy Mother's Day. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time tonight included. We're going to talk about futures. We're going to go over all of this more in depth, so come join us. Now, without any further ado, let's get into it. So, in case you guys have not watched the videos over this weekend, I will briefly run through why I think potentially this week could be very bullish. And when I mean brief, we're going to leave out some of the more nuanced things and get straight into the meat of the situation. So what is essentially going on besides, the war in Russia, China lockdowns, all of that? What you can boil this down to, and why the stock market, especially the NASDAQ, has performed the worst since 1973 in 2022. Believe that or not, you are living through a very historical time. You could boil it all down to this. Investors don't know how to value stocks because there are growth concerns, especially since the S&P 50% of the weighting is controlled in the top 10 stocks. Think about your largest companies in the world: Apple, Microsoft, Google, Tesla, Nvidia, those kind of players. So there's a big difference in valuations if you're thinking about growth slowing down, whether you expect these companies to grow 10%, not grow at all, maybe decline 5 or 10% in earnings. That's going to make all the difference of what you are willing to pay for these stocks. Inflation is the key to that, because inflation ultimately, depending on if it continues to go up, will affect the Fed's decision to raise rates more aggressively. If it comes down, potentially could be a huge sigh of relief that, one, inflation is not going to last forever. That's the obvious part. And then that the Fed might not have to raise as aggressively. And we get that key CPI report coming Wednesday, May 11th at 8:30 in the morning. My apologies. So coming Wednesday, midway through the week, we're going to see, is inflation ticking down the third straight month in a row for core CPI, or does it head back up? If it goes back up, then you're going to get a lot more of that valuation concern. Because after all, what is a fair value for something like Apple if you don't know what it's going to grow as? The stock market is a tool used to discount the valuation into the future. If people expect valuations and growth to really slow down, they're not going to pay as much. Now, if it's like 2020 and people are expecting 5% GDP growth year over year for ever, essentially, that's how the markets were pricing stocks in 2020, then you're willing to pay a lot more for even terrible companies that never should have been where they were in the first place. So that's the real issue. It comes down to inflation, and then it comes down to the Fed. We have the CPI report Wednesday. So that's going to be a main driving factor and probably the biggest thing to contend with. Now, specifically for AMC stock, we do have earnings coming Monday in after hours, which is very interesting because usually AMC does not report on a Monday in after hours. So if AMC's earnings are actually very good, which I don't expect them to be like a blowout earnings, but Adam Aaron kind of sandbagged last time, saying don't expect good earnings. He literally said that on the earnings call. He said, Q1 is not going to be so great. So we're not really expecting too much. That's where the upside possibly could come in, because if you're not expecting a lot and then your specific company like AMC reports very good earnings and there's a lot of good things to say and investors were not expecting that, you could see the price rapidly move to the upside. Especially the lower we are heading into earnings really gives us a higher probability of rallying after earnings. That is what has happened the last two Fed meetings. You've sold off into the Fed meeting and then you've seen a rally. The last rally was obviously very historic. We rallied like 10% in 2 weeks, which was huge. Even last earnings last week, or last Fed meeting last week, you still rallied 3% on the day. in like 2 hours after the Fed. So very, very important where AMC is heading into earnings. And AMC is pretty much at the lows of where it was months ago. I mean, going back to March 14th, you're pretty much at the same level, sitting at $13.76 per share right now. We did move up about 27 cents here in after hours on Friday, up about 2% in after hours, down 6.33% in regular trading. So you're sitting roughly at about $14 per share. So still very, very low heading into earnings. And I do think AMC could move up based off of earnings, but historically we're about 50-50. Right, we moved up this earnings, Q4 2020, moved up Q1 2021, moved up Q2 2021, moved down the last two earnings. Well, you could call last earnings a rally, but we did sell off right after earnings, and then we did get that Fed-induced 200% rally. So we'll see how it hashes out. I'm pretty bullish for AMC earnings in general because there's not those high expectations, and that's going to be important. And then we ultimately do get the Fed report on Wednesday. You do have some economic data as well, which we will go over later, the video that comes out at 4 p.m. because there's honestly too much to talk about here in this video. And that gives us a lot of time to really see how the markets are looking at AMC earnings on Monday. And then you get all this economic data. You get the inflation report. If the markets do rally like I think they possibly will after the inflation report, then AMC, considering if they have good earnings, could really be a big winner this upcoming week. But keep in mind, I'm not a financial advisor. I'm not your dad. I'm not nobody of relevance to you to tell you what to do with your personal position. I don't care if you buy, hold, or sell AMC. I've went over this many times. The more people that sell is the more people that are going to FOMO back in when an actual catalyst comes out, when there is a big reason to actually buy into the stock. When FOMO comes back in, people that sell out are going to be the guys that FOMO right back in. So that is that. That's kind of my mindset, my logic heading into this week as far as the data and as far as AMC earnings. Now, you do have some other companies, a lot of retail companies that report earnings this week. Tattooed Chef, Monday and After Hours, Upstart, Plug Power, Novavax, Blink, and Lemonade. Tuesday pre-market, you have Peloton, a couple home building companies, Cisco, Arena Pharmaceuticals, I know some people like that stock, Kronos, Workhorse. Tuesday and After Hours, one of my favorites, one of my larger investments. I think my second largest investment right behind AMC, which is SoFi. Then you have Roblox, Unity, Wynn Resorts, Matterport, and Rocket Companies. On Wednesday pre-market, you have Yeti, Fiverr, EVgo, Krispy Kreme, Wendy's, PaySafe, and that's pretty much that. Wednesday and After Hours, you have Disney, Sandstorm, Gold, Royalties. That could be pretty interesting given the commodities market. Rivian, and I've been seeing a lot of Rivian trucks, so that's going to be a very interesting one as well, and something I'm looking a little bit closer into acquiring a decent-sized position if this thing keeps falling the way it is. Dutch Bros, Beyond Meat, also holding Beyond Meat currently. Sonos, Bumble, if you guys are into that dating shit. There you go, Bumble. But Thursday, you have Six Flags, Veru, Tapestry, US Foods, Bakkt, I know that's a big retail stock as well. Figs, Affirm, Aora Cannabis. That's pretty much it for Thursday. Friday, you have a lot of biopharma stocks that are reporting, so nothing too crazy there. But overall, a big week for retail, most notably AMC, SoFi, Roblox, Matterport, Rocket, Beyond Meat, Rivian, Walt Disney, Yeti. That's an interesting one for me. Affirm, Six Flags, and those are a couple of the bigger ones. Potentially Disney could move the markets because they do show us a little bit of that consumer demand. If consumers are still out spending, you have to keep in mind the consumer accounts for 70% of GDP. So if the consumer starts to look bad and they're not going out and spending as much, they're not going on as many vacations as we thought they were going to, it's not going to be a good situation for the overall markets for potentially avoiding a recession. So those are keys. Now let's jump into AMC specific data, and we can see the short interest of free float is sitting at 19.13%. Current shares that are sold short of 98.6 million. Cost to borrow max of 2.7 2.32%, utilization of 100%. It's been like that for months now, so nothing too crazy there. Days to cover at 2.68. So the situation is looking pretty damn good, and if we do see a big rally off of earnings, or maybe just this week in general, you could put a lot of pressure on the shorts to potentially cover on their short positions. And I don't want to make this claim, but we could get a leg of the MOAS. Now, we will need to see the Fed actually confirm that they're not going to keep raising as aggressively as we expect them to. We need to see the bond market relax and bond yields come down a little bit. We've seen a very historic rally in the yields of bonds, and as Mike Wilson says, Morgan Stanley's chief U.S. equity strategist, that the bond market is calling the tune here, because the bond market is 9 times larger than the stock market. And when this thing is making parabolic moves and interest rates are going up this much, this suddenly, you have to expect to see equity markets sell off in a very dramatic way as well. This looks like a damn momentum stock, especially, I mean, pull up the all-time chart, pull up the 5-year chart. We haven't seen anything like this since the crash of 2020, when investors actually flooded into bonds. And this is even a larger move in the bond market than you've seen in a 100-year pandemic. To put that into a little bit of context for you, the markets are severely overstretched to the upside in the bond market and to the downside in the stock market. So when it's like that, you're definitely primed to see a rally. Now, let's take a look at the option activity, and we had 15 orders totaling $7.38 million here on Friday, positive order value of 26%. Lots of puts that are coming through on the option chain, and a lot of these are close to the money, so you do get that artificial shorting from the market makers that have to go out and hedge all of these put positions and essentially short stock onto the open market. So that's pretty much what has been a main driving factor of pushing AMC stock down. I don't really think retail is just folding their hands and selling out in a dramatic way. Obviously, some people do, but I think it's just a lot of that put activity that we are seeing. Now, heading into this week for the call activity, 62,754 calls that are out of the money, 534 that are in the money. So it's a stupid ratio of out of the money puts to in the money puts or calls. You could see a rally based off of that. Now the put side is pretty much 1-to-1. In the money puts at 20,000, out of the money puts at 23,501. So a lot of fuel on the fire to potentially see a big move to the upside, even based off of the option activity and all the negativity overall in the equity market. Usually when negativity is that bad and there's not systemic risk, there's not a pandemic, it's not '08, and inflation will likely come down, just using common sense here, and earnings are good in the highest weighting companies of S&P and NASDAQ, and we don't even get their earnings for another 3 months, it's very, very hard to be overly bearish right now. And even if you look at the S&P, which we've said that, a lot of people have said that over the past 6 months, that it's hard to be bearish right now, but especially down 23, almost 24% on the NASDAQ year to date. I mean, it's getting a little bit ridiculous at this point. Like this is probably the worst that you will see to start a year in a very long time. NASDAQ is down 23.29% since the first day of trading this year, which was January 3rd. Down 23.29%. This is like terrible. Like it's hard to put this kind of move into words. Like, you didn't even see this in the worst years on record happening this fast. At this pace, you're going to be down 40% on the year. Get the fuck out of here. There's no reason to be overly bearish right now, in my personal opinion. I do think we head lower throughout the year, but not right now, at least not until we see earnings really start to look bad for a lot of the large tech stocks. But you could see on the NASDAQ, triple bottom going on right here, right? You bottomed at 410 and you bottomed twice at 405, retracing both days, really the last hour of trading. Massive reversals here on May 2nd and then also on May 6th. So that, to me, is a textbook sign of a short-term bottom. And given where the Bollinger Bands are, given where the MACD is, given where the RSI is, it would not surprise me to see a move back up to about this Bollinger Band. That's typically what tends to happen. The markets usually stay around the 20-day simple moving average. During volatile times and when these Bollinger Bands really start to widen, you can get moves that are disconnected, but eventually it tends to revert back to the Bollinger Bands, and that is currently sitting at 429.27 on the S&P. That would be about an $18 move from the upside, or to the upside, from where we currently sit right now. So that's kind of what I'm expecting. If CPI does not come in good, then disregard this whole video. It doesn't mean anything. I am hoping, and I would bet that CPI does show a bit of a reflection. It's estimated to come in at about 8.2%. Last CPI report came in at 8.5%. And I mean, this could be a really good week. It also could be a very bad week. If we break under 405, we're probably going to 400. If we break under that, we could test the yearly lows, because we would be in no man's land. From 400 to 361, we could find a low about 380. That would give the markets about a 17 times earnings multiple, or 17 times PE. That's pretty respectable overall. But, you know, the largest stocks have really been holding the markets up to some degree. A lot of stocks are down 50 to 80% right now. Just your Apples, Microsofts, Amazons, Googles, you know, Teslas. Those are the ones that are only down like 20%. And those more accurately reflect what is actually going on here in the market. So all in all, my price prediction for AMC stock, I'm going to give you guys both sides. If this thing is bad, if this week is really, really bad, if earnings are bad, just everything is bad, like fucking the world is coming to an end. The financial markets just think the world is coming to an end. I mean, you could potentially fall as low as $10 per share. That's going to be a real big psychological support level, but that would be a very dramatic fall. So I wouldn't necessarily put that as my base case scenario. My base case scenario would be really in between $13 and $15 per share, unless we get a big move to the upside or the downside. So worst case scenario, $10 per share. Best case scenario, if earnings are good and then the week is followed up with a lot of bullish data, CPI is good, potentially could come up to about $18 per share, test the 50-day moving average, or even as high as the 100-day moving average at $19.54 per share. Really, I think we'll get a lot of resistance around $20 right now. If we did rally there in the short term, until the Fed either stops acting so aggressively, or if inflation continues to come down. That's when you're going to get a real fundamental change to the markets, and things could get better again. At the same time, you have the Russian invasion in Ukraine, and Russia, May 9th, which is on Monday, they have something called Victory Day. It's when them and the West, right, the US and UK defeated Hitler and Germany. May 9th, 1945, and that's a big celebration for them. A lot of people have talked about that's potentially when they could declare victory, and in some sense that they won in Ukraine, and that would be really good for oil. That would be really, really good for the markets as well. Take that nuclear war risk out of the markets, and don't underestimate how much that is actually playing on the markets right now. So potentially a lot to be bullish about, potentially at the same time a lot to be bearish about if none of this comes true. Odds of that happening are under 50%, so I have to be bullish given the NASDAQ is down 23% since the year started. It's kind of common sense in that regard. So that is going to be all for this video. That's what you guys need to know. I know this video is a little bit longer than the typical videos, but this is a bit of a abnormal week, we'll just call it that. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Come join us on the live stream, and if you guys want to support the channel and get all of my trades in real time, link down below in the pinned comment. Come join that. We have over 100 active traders every day doing our thing in there, making some money. We're not sitting there with our hands tied while the markets just collapse the most in 50 years. Nah, we can't do that. If you guys want to be in on it, come join us. Link down below in the pinned comment. Thank you for watching, and I will see you in the next one.